Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Thursday, July 8th. Great to have you here with us. Once again, I'm your host, Jesse Allen. Thanks for joining us. MarketTalkAg.com. That is our home on the World Wide Web. MarketTalkAg.com. Find all of our social media links there, our YouTube channel, all of our streaming sources, Spotify, Apple Podcasts, iHeartRadio, wherever you stream and download your podcast. You can find us on that medium. We'd love to have you become part of the Market Talk family. Share it with your friends. Our radio affiliates, everything is all on our website, markettalkag.com. Well, it was a down day in the markets, kind of a seesaw back and forth here throughout much of the day. It just seemed like the downside pressure won out. So let's talk about it. Bring in our friend John Heinberg with Total Farm Marketing. And John, good afternoon to you, my friend. I don't know if I described it the best way or not, but it just seemed like a seesaw, a teeter-totter. We were just back and forth a little bit, and finally we kind of just gave in to some of that bearish pressure here today.
Yeah, it's a great way to describe it. Market's been moving both sides of the coin, at least in terms of the grains today. Beans went quickly from negative to positive, and then very quickly back to negative. Corn seemed to struggle to try to get positive a couple times today. We're at a spot here where these prices have been consolidating now since that big drop on Tuesday and that just difficult start to this week. And it looks like we're a little bit of a threshold area here for all three of the major grains that either we're going to put some double bottoms in or break out of the consolidation to the downside. So it's a little bit nerve-wracking right here, especially with that report next week, the weather forecast, and then all the things going on in terms of outside markets and what could be also adding some pressure in here as well.
Well, and, we've focused a lot on the weather this week and watching the rain in the forecast. A lot of that rain hasn't come to fruition, but you and I talked a little bit, and I get the feeling that maybe there's some other things here. You mentioned the outside markets and money flow. There's some other things at play here, it seems like. And let's talk charts a little bit. I mean, some of these charts, just you alluded to it, they're not looking too good right now.
Yeah, we've got some definite weakness on the charts. Started obviously with that big break on Tuesday morning, and prices just haven't seemed to find any traction since then. Go look at December corn. We're trying to build a little bit of a wall here at the 520 area, but to me it feels like it could fall apart very, very quickly. Especially like I said with that USDA report going forward here. If we don't seem to see that price level hold, and it opens up the downside to some pretty quick targets, $5 being a significant low. Then we got that gap all the way down at the 477 area on December. It wouldn't shock me that if we see this market break through this barrier that we're trying to build here this week, that the technical side takes over and the technical selling kicks in, and that we've seen how fast that can quickly move this market. That 470 area has been something I've been looking at for quite a while now, especially with that gap down there. And when we've got the friendly news with that acre report here, at the end of the month, and we just haven't held those gains, just kind of tells you that money flow might be a bigger factor here than other things at this time frame. Same thing in beans, 90-cent drop on Tuesday. Now we've basically been consolidating the last 2 days at the bottom of that range. That looks a little bit scary to me as well. You go to Chicago wheat, we look like we're trying to build a double bottom here at the bottom of that chart around that 620 window. If those don't hold, obviously the downsides are very open. It's still in a market that's got a lot of air underneath of it. And touching back on corn and money flow, I mean, the funds are still sitting on a very large long position, probably record long for this time of year. And so there's room for them to push this thing if they want to. And the weather, the numbers, the outside markets, all might be those factors that put it all together and just say, hey, this is time for this market to go softer, despite what the fundamentals may say.
So looking at all these charts and looking at some of the pressure and some of the downside risk and the gaps that we could possibly fill if we do break through some of this resistance levels, what's my play here if I'm marketing? Am I looking at put strategies? Am I trying to lock in a floor if I don't have one? I mean, what are we looking at right now, John?
At least for corn and probably the wheat side of things, because we're in harvest, so we're seeing some pressure on the wheat market there. That's going to be a yes. Continue to push some bushels out. December corn at 523, not the greatest price concerning where we've been, but think about where we were last year at this time. As I talked with a few customers today, saying, "Boy, we're hoping we can find a $3 cash sale last year at this window." So there's still good value there. A price I'm watching on the put side in corn, that $5 area seems to be a swing point. That might be a put you want to put underneath the December contract, making sure you're securing some floors. Again, this is about risk management here. Producers are plenty long the grain in terms of the bushels. Crop conditions in some areas have really improved, and that's still some of the reason maybe this market's got some pressure in it. So make sure we're protecting that downside in here. Do I like the long-term story? Yes, I do yet. I still think we might have something down the road, but at least here in this window, and the other little factor we even talked about is seasonality. Typically, this is a time frame when markets work lower, especially if there aren't any major problems out there. We have problems, but at 64% good to excellent, how major is it, at least at this stage, that this market wants to respond?
Well, I know we're at a key time for corn right now. We're in pollination, and we're looking at the weather models. That's been one of the headline stories, well, I guess we could say, here this week. And a lot of these rains I mentioned earlier haven't really come to fruition. I mean, you look at that Western Corn Belt. Yeah, some folks have got a half inch. They got maybe a little more, but that widespread rain that's been forecasted really hasn't been there. There's chances still in the forecast through the weekend, but then sound like we're turning hot and dry again. I mean, we look here through the weekend. We had that report on Monday. I'm thinking getting into next week, if we don't get the rainfall we need, do you think that could be a bullish driver in this market to pop us back higher, John?
I agree, very much so. That's still going to be the wild card that's out there, and what happens in terms of the weather conditions. And, we've seen some rains move through South Dakota and in Minnesota. They kind of came out after the drought monitor map got posted today, which saw some more decline in terms of conditions in those areas. But the cool temps right now, the rain in the forecast gives us maybe some stability for a little bit. It's going to help a few people out. But in the longer term, we still need to keep a focus on the weather and what's going to be happening. Like you touched on, we're hitting pollination in some regions. It's cool, it's damp. We didn't pick up a lot of rain out of the last storm here through in central Wisconsin. Maybe a little bit more coming over the weekend, but obviously you can tell things are relaxing with the coolness in the air today. So it's still going to be the story going forward. Is going to be the weather that's going to keep this volatility in this market again very aggressive. Wouldn't surprise me, like I said, if we see a break to the downside here, especially maybe pricing in some numbers for that USDA report on Monday. If the USDA doesn't move the yield around, we could have carryover close to 1.5 billion bushels. Is that 520 corn according to the market size? So we'll have to watch that. That's why I'm a little cautious over the next few days. But then as we get through that report, we typically have kind of sold off around those reports anyway. That might be the window that say, hey, we're cheap enough here now. Let's make sure we're focusing on that longer term weather. So going to be volatile for a while. But again, the weather still is the longer term answer in this market. And again, still some of the reason I'm still friendly long term, just cautious here at least in the near.
John, let's flip over and let's talk livestock today and look at the charts there. I know hogs were okay on Thursday. It was a welcome surprise there for the most part, but that cattle market lower across the board, just trying to find direction and not finding it. But looking at charts and things on the cattle and hog side, I suppose pick which one you want to start with, John, but let's talk about where we're at in these livestock markets right now.
Let's go ahead and just start with that cattle market. A couple different things happened. Obviously, a difficult close today in that August contract. We haven't called the 100-day moving average, and we haven't been under that in quite a while, and that's kind of a significant closing point. May flip this market over for a further test of the downside. At 119.27 today, August cattle trading about the lowest point since early June. And, it started last week. We had that hard breakout, I think it was about Thursday last week. Couldn't hold those gains, continued into this week in terms of the selling pressure. It just looks like this market wants to push lower. Seeing some cash trade this week, that's a little bit disappointing. I think this market's looking for a little more firmness, and we're kind of steady, even seeing some softer bids in some regions. It feels like the Packers got plenty of contracted cattle, so they're really not aggressively going after, the spot cash market here. And that's got this cattle market thinking some downside might be in front of it. Plus, add in the retail values, and they have continued to slide and struggle. That even puts a little more question on the cash side as well. We're in a window for both pork and beef that this market can slide a little bit lower just because the demand concerns are out there as we've gotten through the 4th of July and the Memorial Day type grilling window. Now we got that pause until, the retailers start packing up for the Labor Day window. So we'll have to kind of watch how this thing trades out. Feels like we got a little bit of a break here coming in that cattle market, especially the way it handled things this afternoon. You go into hogs, a little different story. Again, that August contract, we're trying to find some footing, but if you look at that formation, it's what we call a bearish pennant. It's basically showing a tightening range that has a potential of a further downside break. We're really watching the Chinese hog prices right now. That market continues to put a lot of pressure on our market globally. Watch those export sales tomorrow. If they don't show some decent demand with China coming back into the market, I think that August contract is poised for a bit of a break lower, especially with the premium it's holding over that October. So a little cautious right now. As much as I want that hog market to turn around and get some traction, it just feels like it's ready to make one more break and possibly liquidate some more length.
Well, John, as well, I know outside markets, it was, we talked about this before we jumped on air, maybe just kind of one of those days. I know the Dow, S&P, NASDAQ, all that under pressure, and just looking at, talking money flow and things of that nature. What are you seeing in the outside markets right now that are having an overall effect on our ag markets?
That was kind of the concern for me this morning when I turned on the computer and, got looking at the morning markets, and you saw the Dow futures down over 500 points and, bond yields were moving, which, is another sign maybe we got some instability in those markets and that can spill over. Just felt like we have one of those risk off days possibly brewing. It didn't get too negative in terms of we've seen those days really turn into some washouts for us, but at least today we kind of held in there. But that's going to be a concern. That stock market or the equity market's been trying to push the futures to new highs. It just can't do it. Sometimes the path of least resistance is lower. So that might be something we're seeing here as we're kind of hitting the middle of the summer window here. The other one that was kind of discouraging was crude oil. We had that nice break higher, put our highest prices in since 2014 and took out those 18 highs. And then we immediately reversed it and took $5 off the crude oil price, which that's an indicator sometimes in the commodity markets how things could be going. Get a little stability today and some bounce back, but that chart really turned negative in a big hurry after a heck of a rally in crude oil. So there's a lot of little things right now that just have me very cautious where the market is, that maybe we're just going to see some profit taking on some length. Or if a market like a dairy market's been heavily oversold today, it was up fairly strongly on some short covering and profit taking. So maybe we're just seeing some money moving to the sidelines.
And that's very, very true. We've had a lot of money in these markets for how many months, John? So it's not surprising to maybe see a little money move to the sidelines.
Exactly. It's summertime, trade thins out, and obviously you got a lot of people on travel or vacation, and the markets just haven't been active. That's some of the reason what's going on in the grain markets. We just don't see the volume that's there and the buyers stepping in. The other side too, again, these markets are driven so much now by just quick money wanting to move in and out. And when the momentum seemed to disappear, so did the money. And, we have those days where they pour into one side or the other. But, boy, when we were on the rally, it just seemed like everybody wanted to own corn. Everybody wanted to own beans or hogs. But now on the flip side of this, as this market's kind of fading back, you just see everybody kind of stepping back saying, hey, what's the reason to buy this again? And right now we don't have one.
Well, and the one thing, too, I think about is, you look at a day like today at 10 to 20 cent trading range compared to a dollar trading range. It's at least a less volatile day and maybe something to, not take for granted just with the way these markets have been lately, John.
That's very true. And there's still wide swings when you look at the highs and lows on the course of the day and enough to kind of still keep you on pins and needles. That might be the other thing that's coming in here, too. We're just going to see some volatility, maybe move out of the markets. That'll have some impact on options prices in that regard, but it might give producers an opportunity if you want to look at those strategies and bring some of the costs down to them in this window. But, at least here in the short term, looking at seasonality, I want to stay, just the way the markets are acting, the charts are acting. boy, I'd sure want to make sure I got my risk managed and keep the, we're plenty long in terms of cattle on the hoof, hogs on the hoof, and grain in the field in this regard.
John, great insight as always. Any other final thoughts you have for us today?
Well, obviously, we're going to keep an eye on that report Monday. It's going to bring a lot of volatility. Again, just kind of look at your situation every day. What is my biggest risk? What do I need to adjust to? Right now, like I said, building a floor is probably the best key given seasonality and grains. And, if you're wrong, you got plenty of bushels, plenty of upside potential out there. I would rather sacrifice a little put premium on the top side, on the bottom side, to keep that top side open versus wondering what we could have done 50, 60 cents ago.
John, I know if producers need any advice, need any help, they can reach out to you and the team there at Total Farm Marketing to get it. What's the best way to do that?
Sure. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Or again, feel free to check out that website, totalfarmmarketing.com. A lot of great information, markets, weather, news, as well as some webinars that we'll be putting together here, especially after the report on Monday. They're free to producers. Check out our info. Feel free to sign up for one of those webinars.
John, appreciate the time as always. Have a great rest of the day. Great weekend. We'll talk to you next week.
Sounds great, Jesse. Have a great week, everybody.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk, brought to you by GrowMark FS. Find us online, markettalkag.com. This has been Thursday, July 8th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.